Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
Well, our most read story on the Bloomberg this Friday is about last night's debate. President Joe Biden bet that a debate with Republican and former President Donald Trump would boost his moribund re-election campaign. Tim, his gamble, though, many would say, has failed.
Yeah, we continue Bloomberg's coverage of last night's debate. Here with us is Bloomberg Radio and TV political news director Jodi Schneider in our Washington, D.C. bureau. Also with us, Bloomberg Opinion West Coast politics and policy course columnist Erika D. Smith in Los Angeles. Jodi, let's start with you. Carol did a really scientific, or not so scientific, poll on the website formerly known as X, asking people if they were voting today. Carol, what were the results of that?
Yeah, I'm just pulling it up. So I asked if you were voting today. Biden got 50%. Trump got 31% and undecided got 19%. People might be surprised by that. No standard deviations yet. Like we said, not very scientific.
Or ever, maybe.
Yeah, exactly. Listen, we all watched the debate last night, and we're going to dig a little bit deeper into President Biden's performance in a moment. I know everybody's focusing on that. Simply though, and maybe this is naive in our question, is there a winner? Is there a loser from last night? A clear winner, clear loser?
Well, I think if you're looking at performance, Joe Biden clearly lost. He seemed lost at times. He had, first of all, his voice was odd. They told us that he had a cold, but they didn't kind of tell us that beforehand. So when your first impression of Joe Biden, a question or so in, was, what's going on here? His voice was bad. He seemed to be faltering. He was really put on the ropes early on by Donald Trump and stayed there, frankly. So in terms of performance, Donald Trump was clearly the winner. Now, in terms of policy issues, first of all, there wasn't a lot of policy debate. They were each going on kind of in their own way. But Donald Trump, continued a lot of misstatements, lies, attacks, sort of ungrounded attacks. So from that standpoint, you're watching it, you don't exactly feel good about the grasp of the issues there. Mm-hmm. But he did have a much stronger performance than President Biden. And interestingly, President Biden today at a campaign event seemed robust. So very, very odd performance last night.
Okay, go ahead, Carol.
No, well, let's just go there for a moment, because we were just watching, too, where he was in, I think it was Raleigh, North Carolina, and it seemed much more like the President Biden of the State of the Union. What gives? How do we reconcile that?
Yeah, I don't know. I mean, that's the question of the day, I think. One thing is he did have a teleprompter in Raleigh at that campaign event. He didn't last night, which is interesting. There was no audience last night, which everyone seemed to think was going to benefit the president rather than the former President Trump, because Trump loves the crowd, right? But it really seemed to hurt President Biden.
Okay, so let's look at a couple key aspects from last night's debate. Jodi, here's CNN's Dana Bash and Donald Trump at last night's CNN presidential debate on Trump, whether or not he'd accept the next election outcome in November. Check it out.
The question was, will you accept the results of the election, regardless of who wins? Yes or no, please.
If it's a fair and legal and good election, absolutely. I would have much rather accepted these. But the fraud and everything else was ridiculous. And if you want, we'll have a news conference on it in a week.
Okay, Jodi, not exactly a yes or a no answer there. I'm curious if Trump's reticence is going to alienate people, or perhaps alienate swing voters. I mean, they can think of January 6th, just 4 years ago, and the way the president at the time responded to the 2020 election.
Yeah, I think if something was going to hurt him with swing state voters, it would be that, Tim. He not only did he not answer yes or no, he made up things, saying it was not a free and fair election. Every single court seemed to, said that, right? He would not be, Joe Biden wouldn't be standing there if this was something that was litigated. It wasn't. So not accepting the, legal outcome of an election, I think, is something that does disturb disturb swing state voters. And it's that kind of answer that gives them pause.
All right. And let's get to something that you certainly talked about before, Jodi, and was disturbing to a lot of folks who were watching, and what many would say was a key concern for Democrats, and that is President Biden's performance last night. Here he is at the CNN presidential debate.
Making sure that we continue to strengthen our healthcare system, making sure that we're able to make every single solitary person eligible for what I've been able to do with the COVID. With dealing with everything we have to do with. Look, if we finally beat Medicare.
All right, that, of course, was President Biden at the debate last night. I want to bring in Erika D. Smith, West Coast politics and policy columnist at Bloomberg Opinion, because, Erika, you write that of the many prominent Democrats with aspirations for higher office, California Gavin Newsom is arguably the best equipped to pick up the baton from President Biden. We wouldn't have had this conversation necessarily 24 hours ago, but because of the performance last night, we are having this conversation. How is Governor Newsom the right person to maybe pick up that baton?
Yeah, I agree. We wouldn't be having this conversation. And I actually don't think that Governor Newsom actually wants to have this conversation either right now. But, he has been, a lot of people have thought that he's been kind of running the shadow campaign for several months now, particularly people in California who are voters of his. He's been traveling the country, traveling the world, building his national profile. He has, socked a lot of his campaign cash into helping Democrats in other states, networking. Obviously, he's a top surrogate for Joe Biden and has been on the campaign trail almost nonstop for several months. He's emerged as probably one of his best surrogates because he's really nimble in debates, and he goes on Fox News and on the right-wing media without hesitation. We all remember the debate that he did last year with Florida Governor Ron DeSantis when DeSantis was still a presidential candidate for Republicans. And, he got a lot of applause for that, though it was, I don't know if much policy came out of that debate either. But He has really served as somebody who's kind of ready to kind of take into that next step as a backup. And so now we're having this discussion.
Why Gavin Newsom over Vice President Kamala Harris, also from California, and also another California politician, Erika?
Yeah, I think those are the two, candidates I think most people are going to be talking about. Obviously, Kamala Harris, because she's the vice president. And as I write in my column, Vice President Harris is more than capable, I think, of taking over this job if necessary, and running at the top of the ticket if that's what voters want. I think her biggest problem is her polling. You can argue about why people don't like her as much as, the various different reasons, what it, has to do with sexism or racism or what. But, her polling numbers have never been that great. And I think that, Gavin Newsom probably is going to do better with voters right now than Vice President Harris.
Well, Jodi, give us the view from Washington, D.C. on this. I'm curious if Gavin Newsom, in your opinion, in your view, and given in the circles that you report from, has what it takes nationally to have that national appeal. Certainly well known in California, but is he known well enough nationally?
Yeah, I think he's well known, Tim. I think the question is a Californian. Is that who's going to kind of be able to take on Donald Trump if Joe Biden were to step away? There's a lot of, Monday morning, I guess Friday morning quarterbacking here today. And a lot of people are talking, you hear Gretchen Whitmer's name out there from Michigan. You hear Wes Moore from Maryland, who's only been in office, a couple of years. We're hearing a lot of names. And of course, Gavin Newsom's name comes out. He has been, out there on the national stage. But I think at this point, it's still just kind of a parlor game. But we are hearing some prominent Democrats and some people who had worked with, certainly for Obama's campaign, some even on early Biden campaigns, who are questioning whether the president should step aside for someone. But there really has to be a conversation that Joe Biden accepts. And that seems to be, certainly from his campaign performance today, for his, at that rally, he does not want to step aside. So until that happens, kind of the parlor game is just a parlor game.
Erika, for those who are listening and watching right now on Bloomberg Radio and TV and across our platforms, you understand California politics, you understand Governor Newsom for our national and really global audiences, because Bloomberg has put out some reports about around the world how people watched political leaders, global leaders, watch that debate very closely and are nervous. What do they need to know and understand about Gavin Newsom? Because he's been playing too on the international stage.
Oh yeah, he has. I mean, he is a big thinker. I mean, I know he kind of comes across as kind of this, he has this Hollywood kind of stereotype, but he's really a policy wonk, and he knows his stuff. He is very charismatic. I think is pretty clear from all the interviews that he's done. But I do think he has a really good mind for policy and for politics. He's managed to get himself out of jams that I think would have, taken other politicians out here in California. But to the broader point about California, right? I mean, California is so far left on the political spectrum that it's hard for I think a lot of Americans to understand California at all, much less California politics. And I think that's going to be his challenge. He's a very likable person. He can move around in different crowds and different groups of people. The question is whether or not that will, fly, if it even comes to that again, if Biden actually decides to step aside, which there's a lot of ifs that get to get through before we get to whether Gavin Newsom's going to potentially run for president.
Well, Erika, again, it is a parlor game, but we are playing it today, and you do have a column that is among the most read, all about Gavin Newsom potentially stepping in. So I'm going to continue with my line of questioning to you about this, because sure. I am wondering about the California element, whether it helps or hurts Gavin Newsom. You mentioned it's a liberal state, however, it does have an incredibly huge economy, among the biggest economies in the entire world. But the view of California, and I can say this as a Californian, what is outside of California is, I think, for a lot of people very confusing. Perhaps they see problems with crime in Los Angeles and San Francisco. They see reports of people moving to less expensive states like Arizona and Texas. They hear about the high cost of living in the state. Does it help or hurt a potential presidential candidate from the state?
I think on the most basic level, I think it hurts because people see those headlines and they think, California is a mess. I think there's a story to be told about how California grapples with those issues and about how oftentimes those issues don't say contained to California, but the California is the first one to experience them. And I think of when we think about homelessness in particular, I mean, California has had a homelessness problem for quite some time, but we've seen that as a problem spread to cities all over the country, big and small. And people are now looking to California about how do you actually deal with this problem? What should we do? And so I think there's a story to be told about, the mess that is California. But I think there's also a story to be told about how we deal with it. And then there's just the broader story of innovation, right? Gavin Newsom gave his State of the State address much later than usually planned, but he did it online. And it was very kind of national sweep, kind of putting California as this the face of liberalism, or as the model of liberalism and democracy in the face of, MAGA republicanism, and how we embrace equity and all of these things that, he's gone on and stumped about. And so I think there are a lot of things that Democrats in this country want our country to be, and to be more accepting and to be more open and inclusive. And I think California does represent that, but there's some mess to get through before you understand what that actually looks like.
And I got to say, when it comes to Governor Newsom, I just go back to COVID. I mean, that was one of the big voices that, it wasn't just a California governor, but on a national scale, I feel like the nation was watching what he was doing and what he was saying in a big way, having covered that day in, day out. Jodi, come on back in. I want to know what you are hearing, though, specifically from the Democratic power brokers, from the big fundraisers that have been backing President Biden, what they need to what they want to happen next. Are they pushing for change? Are they pushing for him to step down?
Well, I think there's a lot of conversations going on at different levels, and one of them is where to put your money. And one thing I think hasn't gotten so much attention yet, and certainly something we're hearing a lot today, is the so-called down ballot candidates, Democrats in the House and the Senate, where the Democrats could very well win the House this year, and Hakeem Jeffries could become the Speaker of the House, and who very much wants to be the Speaker of the House. So I think there's a lot of concern there that they not be dragged down, that if the ticket, that if Biden at the top of the ticket is not as, is going to have issues and going to have increasing issues, that they don't want that to reflect on them. Same thing with Senate candidates. So I think there is a fair amount of concern there. And frankly, we may see some donors, if they decide they don't really want to back Biden, they could go to back House and Senate candidates instead. I think that's something we're going to have to see with the money, where the money flows in coming weeks. Both campaigns, both Trump's and Biden's campaigns, have said they had very good fundraising hauls last night with the debate.
Okay, so Jodi, what's the next focal point for you if we think about the roadmap to November? We see President Biden in North Carolina today, President Trump, I saw a video of him hitting the links and making some comments after making a drive. What's your focal point?
And great if you could do it in 30, because we'd love to get Erika's view on that as well. Go ahead, Jodi.
Well, first of all, in 2 weeks, we have a sentencing on the 11th of
right.
former President Trump in New York on the 34 counts of which he was found guilty. And then we have the RNC convention in Milwaukee just days later. So those will be big moments for the former president. And of course, we have the Democratic convention in August for President Biden.
All right, save 30 seconds for you, Erika, as well. What's the next thing on your focal point or on your radar?
Yeah, I'm looking at the down ballot races. Obviously, Arizona and Nevada are big swing states. There's a primary, not presidential primary, but there's a primary coming up in Arizona at the end of July. Obviously, looking at the RNC and what happens in court for Donald Trump. But also, there's a Supreme Court ruling hanging out there about immunity, which hasn't landed yet, which I guess will land on Monday. So there's a lot of different ways this could go. So just trying to keep up.
And we're only halfway through 2024. All right, guys, thank you so much. Bloomberg Radio and TV political news director Jodi Schneider in our DC bureau, and on the West Coast, Bloomberg Opinion West Coast politics and policy columnist Erika D. Smith.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
One of the focal points, certainly, we've been talking about it all week, has to do with the Fed's preferred inflation gauge, the measure of underlying U.S. inflation decelerating in the month of May, bolstering the case for lower interest rates later on this year.
At the same time, household spending rebounded after a pullback in April, and income showed solid growth, offering some hope that price pressures can be tamed without lasting damage to consumers.
All right, so let's get to it. Our economics and rates roundtable. Back with us, Molly Smith, Bloomberg News economics editor, and Bloomberg News rates reporter Michael Mackenzie, both here in our studio. All right, Molly, first up, the data, the inflation print, the data confirms essentially what? That it's easing.
Correct. Yes.
Good stuff.
Good news.
We're not surprised, right? We knew a lot of the components that go into this.
Correct. Yes. So we knew, we had a strong feeling that 0.1 monthly increase in the core was coming. So that came in as expected. And then, for all of our fans who like to look at it out to 2 decimal places, it was actually a 0.08 increase. So looking at it on the unrounded basis, that's the smallest rise since late 2020. So that's definitely a great sign as well. And also looking at the spending data, this was encouraging in the sense that services spending really slowed down in the month. This has been the part of spending that has kept inflation so elevated that if we are going to hopefully see some more slowing in services spending, that's hopefully going to translate into the stickiest part of inflation ebbing as well.
Any surprises whatsoever? I mean, everything was pretty much
I was
spot
surprised
on.
to see the savings rate go up.
Yeah.
I mean, that's
just because you hear about excess savings being
depleted.
Yeah.
Right. And that people are, you're stretching more for like where you're going to find money to support spending. So to see the savings rate go up, I was surprised by that. And also to see inflation adjusted disposable income rise by the most since early last year. That was certainly surprising. I feel like I struggle with this a lot to know, and we talk about it a lot on this show too, what is the truest measure of the labor market right now? There's so many mixed signals. Wages especially, I really struggle with that one. There's so many different metrics of what is going on with earnings growth, and this one, I feel like, whether you're going to take signal from this report within the PCE, we get average hourly earnings next week. You have also the employment cost index that's quarterly.
Right.
There's so many different measures out there to describe the state of wage growth, and they can be conflicting at times.
This is why it makes it tricky. Speaking of maybe a little bit of a conflict, I don't know, it feels like rates have moved around a little bit today, Michael. So walk us through in terms of the reaction off of the inflation print.
Well, Carol, the inflation data was as expected, and that's a relief. And we saw a bit of a bump up here in Treasury prices, so yields dropped.
Yeah.
And then we've just gradually unwound that. And I think what's interesting now is we've got higher yields led by the 30-year and 10-year, and that's called what we call the bear steepener. And the bear steepener, I think, has probably more to do with what happened last night in the debate, because you saw Trump doing very well, and the market now thinking, okay, this has put the election on the radar here firmly, and what we're hearing from Trump and is likes tax cuts, wants to keep spending, So you start to think about down the road, you want to be in a curve steepener. You want to be selling the back end, those longer dated rates, because the deficit situation is still going to be a problem coming down the road.
Interesting. So
that makes sense.
It's also month end and quarter end today too.
Yeah.
So I do feel the market kind of bought enough treasuries earlier this week. We had 3 auctions, for example. So it's just really about, it's a messy day. It's the last day of the month, last day of the quarter. So, but the reaction, if you look at it straight line after what happened last night, you can go, people want to put a steepener on.
But not a big reaction, though.
Not a big reaction. We're still very much within the recent ranges. We're
So
still
it's not
towards,
like a reset or
it's not
or
a reset.
change of how...
No, and in fact, if you look at the odds for a September rate cut, they're still around about 65, 68%. We're still pricing in a little less than 50 basis points or half a percentage point of cuts for this year. So the market's still very much in line with the Fed. September's in play. And as Molly, mentioned earlier, we got the big employment report coming out a week today. That's going to be the next big piece of sort of data that the market will be looking for.
But of course, if that's coming out coincidentally July 5th, I mean, I personally actually won't be here, so nice for me, but I'm sure Tim, you will be here.
I will be here.
Of course, there's
With bells
news.
on.
Got to be here for the news. And I found that day off without even realizing the jobs report was coming out. So who knows? Maybe that's, again, poor on my fault. But maybe, I mean, look, I'm sure there are going to be a lot of people away from their desks, and who knows what kind of choppy trading activity you might get on some lighter volume, presumably that day.
Hey, Michael, I do want to go back to an election question here, because you talk to bond traders every day.
Yep.
And I'm wondering how they're thinking about the Fed if the former president wins election in November, and he's talked openly about his desire for lower interest rates, even when he was president. And also, we saw that Wall Street Journal report a few months ago about the idea of being more involved in policymaking with the Federal Reserve during a Trump administration.
It's certainly a topic that myself and my colleague Liz McCormack have been asking a lot of investors recently. And the general view has been, you can't rule out something different happening here. But everyone we've spoken to make the point, the Fed is an independent institution. It has a lot of backing across party divides in Congress. You only have to see some of the recent appearances of Powell in front of the Senate Banking Committee and the House Financial Services Committee. People on both sides of the aisle have made it very clear to Powell, we thank you for being independent, focusing on the economy. I think there's a lot of credibility with the Fed, and I think ultimately it's very hard to see how a president can really bully this Fed.
You want to roil global markets, right?
Well,
Start
you will.
making a Fed making it not independent, right?
And actually, as some people said to me, you can see a scenario where the Fed actually ends up having to be the voice of reason and makes a big stand. And I think actually, in the end of the day, you're getting inflation down. You are going to ease policy if unemployment starts to rise. That's the Fed's job. They know that. I'm sure Molly's got some good views on this as well, but that's the feedback we've got from bond investors.
Yeah, Mary Daly was speaking about that today as well, that take a look at the PCE report this morning. She was speaking after it came out that this is a great example that policy is working. I think the counterpoint to that, though, when she was saying that, inflation is coming down, that the jobs market's cooling, spending is cooling, and that's all evident of policy working, I think a lot of that you could also just say that we are coming from extremely high levels of all of these measures, and inevitably they had to come down whether interest rates were high or not. Just the sheer fact that inflation has persisted has also led to a lot of these indicators starting to weaken. So, I don't know, just a little counterpoint there that I don't know that necessarily this is all the work of monetary policy.
I also do wonder, Mohammed El-Arian, Michael, in your story, continues to be concerned about a Fed policy mistake. I mean, does the data, first let me ask you, Molly, based on the data that you continue to see, does it feel like the Fed is behind?
No, I don't think so. I mean, I think that, look, I'm going to sound like a broken record. I've said it here so many times, but the first 3 months of the year certainly did not support the Fed to start cutting rates any sooner. That was when you look for what's it one's a print, two's a party, three's a trend, or whatever we said. That was certainly they said we have to take signal from this, and they did. And now we're finally starting to see maybe some more prints come in line to show that inflation has resumed its downward path. Jobs market has very, very gradually slowed. Still hard to really say that it's really cracking in any meaningful way. So No, I don't think that they're behind, but then of course you have people who say that policy acts with long and variable lags, so that the worst may be yet to come.
So over to you, Michael.
Well, I think the Fed is looking pretty good here because this week we saw in Australia and Canada inflation kicking back up, and Canada recently cut rates. So it puts the spotlight on central banks that have jumped early, including the ECB, whereas the Fed has said, no, we want to be sure. Now, with PCE running at an annual rate of 2.6%, we're getting into that zone that Rich Clarida talked about last year, when he said, when is this Fed going to feel comfortable? What level of PCE do we need to see? And
especially if there's still lags, right?
Yes.
In the policy.
And so
debatable how long and variable they are.
Correct. It is.
Yes.
So the question, we've yet to hear from this Fed or from Powell, what is the sort of playbook here? At what point do you start to look at easing? I guess they're waiting to see how long employment can stay in shape here. And that will, I think, shape the second half of this year. Now, the thing about the Fed being behind the curve, you could argue basically pretty much central banks are always behind the curve. And this is a central bank that has raised rates to 5.25%, 5.5%. They can definitely take the elevator down and cut rates if they have to. And that's a good insurance policy to have if you're a central bank.
They can be more aggressive if they need to,
exactly.
right? They've got a lot of room to play around.
Exactly.
But to your point, they certainly have to be feeling better than, like you said, in Canada,
I think so, yeah.
in Australia right now, that they're looking at, oh God, like, do we need to go back
almost
the
like
other
their teams
way?
are like, see what happens, see what happened over there.
And the ECB probably breathing a sigh of relief today that French and Spanish inflation came down a bit. And it's like, whew, okay, maybe like it's going to be okay to keep cutting.
All right, guys, thank you so much. Great setup as we head into the weekend. Molly Smith, Bloomberg News economics editor, and Bloomberg News rates reporter Michael Mackenzie. Guys, thank you so much. Really appreciate it.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, we are, as you know, we keep saying it, wrapping up the month of June.
Incredible.
Second quarter.
Time flies.
And the first half of trading in 2024.
Yeah. Okay, as we get ready to do that, Wall Street traders sent stocks toward fresh all-time highs as signs of a cool down in inflation reinforce bets that the Fed will be able to start cutting interest rates this year. We talked about that a little earlier.
Yeah, we did with Molly and Michael Mackenzie. Hey, equities extended, though, this year's rally. We did see the S&P 500 hitting 5,500. We're back below that. And we did see the NASDAQ 100 briefly surpass the historic 20,000 mark. We're back below that as well. So we've been bouncing around here, Tim.
Okay, so we got with us someone from our MLive team who can tell us about stocks rising until they drop like a rock. It is a recent story. Kristine Aquino is Bloomberg News managing editor for Bloomberg's Markets Live blog. She's here in our studio. We're going to get to that story in a minute, but we've spent a good portion of our program talking about the sort of hangover, I think, that people have from last night's CNN presidential debate. What kind of commentary and comments are coming in after that?
Well, Tim, I think there's a little bit more concern, shall we say, in markets, because I think prior to this, there really was the sense that, oh, you know what, we can probably ignore the election until we're much closer to November. But I think yesterday's debate just really heightens the uncertainty surrounding Biden and whether he is going to be able to contest Trump sufficiently when it comes to November. And so I think there is a little bit of concern now among analysts. We are seeing, for instance, strategists at Barclays recommending some strategies that will protect you against inflation, especially because we know that tariffs are one thing that Trump is particularly keen on. So,
wait, so are you saying that the analysts at Barclays are saying if a Trump victory comes, we could see higher inflation as a result of tariffs?
That's exactly that, Jim. I mean, they are focusing on the potential for higher prices just because we know that Trump, during his previous presidency, had hammered home a lot of the points about tariffs.
He did say last night, he repeated again the claim that tariffs, we bring in so much money from tariffs, again, representing, I think, that many economists would argue, a disconnect with who actually pays for tariffs, which oftentimes is the end consumer who pays higher prices that are passed on to them.
You're so much calmer than I am, because I think I was yelling at the screen like, no, we consumers will pay for that. But our Michael Mackenzie was saying that we could see it in the U.S. rates curve. If you look at the 10s, the 30s, like this expectation that if there is a win by Donald Trump and things like tariffs, just talking about more debt, if you will, being issued. And so you're going to see that play out in the market. All right. So should we talk about what we're wrapping up today?
Let's talk about it.
Are you ready?
I'm
Okay,
ready.
so we said we're wrapping up the month, the quarter, and the first half of the year. First up, the first half a bit of a wild one.
Absolutely. I mean, that's probably the tamest way you can describe it, Carol. But yeah, there's been a lot of twists and turns for sure. But really what kind of prevailed over all the nervousness, over all the worry about stock markets is that we're still here and we're still near record highs, but there's still a lot of kind of nervousness. I would say that the first half of the year was very much characterized by unhappiness, despite the fact that we're hitting record after record in equity markets. And, there's just a lot of questions over how long can this go for? And you can really sense that investors are kind of caught between FOMO, but also the sense that it really can't be going on this good for this long, right? And so they're starting to think, what are they going to do once that inevitable shoe drops, once that inevitable pullback comes?
What is the shoe, though? That's what we're trying to figure out, and that's what we've been asking our own market observers. Over at the MLive blog, what are people talking about when it comes to that proverbial shoe to drop?
Yeah, well, I think, Tim, the focus is really on the labor market, and that's kind of the main shoe that we're watching out for. My colleague Tatiana Derry argues that, when it comes to the labor market, there are just like certain unemployment thresholds that would trigger the SOM rule, for instance, which has been a very reliable recession indicator. And so we're very close to that 4% unemployment level that would take us to that level in the SOM rule that would portend a recession potentially.
And that's the forecast for next Friday's employment rate would be 4%. That's the expectation for the month of June. So we'll see. We'll know a week from now. But so anyway, please continue.
Yeah, exactly that. But yeah, it really is the labor market that's going to be the backbone and the make or break kind of factor in this equity markets, right? And it makes a lot of sense, right? Because if people are gainfully employed, they're very much happy to spend. What they spend on is up for debate because we do have the sense that maybe they're foregoing goods and instead spending money on services, but they're still spending. But if their resources dry up and, we start seeing kind of mass layoffs, I mean, not that we're going to get there immediately. This is going to be, over a few months, if not years sort of story. But if we do get there, then that's definitely going to be bad news for the stock market.
Yeah, because we did see personal income numbers come in a little bit stronger today. Spending was a little bit lighter, but I know Molly was talking a little bit about, I thought, was it consumption or something that was going on? That was, or it was savings. Forgive me. That was a little surprise that we saw a bump up when it comes to savings rates. What?
I'm wondering about breadth right now, because one criticism of the rally that we've seen this year is that it's been very concentrated in the top tech stocks. And we're talking about Microsoft, Nvidia, Amazon, Meta platforms so far this year, just dominating in terms of U.S. equities. What does that tell you, the lack of breadth, about further upside potential?
Well, I mean, it definitely is one of the reasons why there is such nervousness about this, right? The fact that your stock rally is built on just a really small number of stocks that, yes, they seem to have a lot of momentum right now. But again, it only takes one or two external factors to kind of unseat a lot of that optimism. And again, if we're bringing this back to the potential for instance, in the presidential election outcome in November, if one of the potential outcomes is inflation, that's not necessarily going to be good for the tech sector, right? They're very inflation sensitive sectors. And so if your rally is built primarily on that sector, then that's definitely a reason to worry.
Well, I guess my always question is, okay, then do investors, as long as the economy continues to grow here in the United States, do investors maybe start to think, okay, there are some numbers that haven't enjoyed, not some numbers, some companies and their share prices that haven't run up like we've seen in that small group of like mega cap tech names. So does the rally broaden out potentially? Could it?
I mean, there's definitely a question or a merit to diversification, right? I mean, every investment strategist worth their salt is going to tell you that, look, like there is a potential for kind of danger if you concentrate too much in one sector. The problem, I think, is that for a lot of investors, if they look beyond that tech sector, right, the mega cap tech sector, there really isn't a lot of kind of companies that promise a similar rate of return. And, for a lot of investors, especially people saving up for retirement and whatnot. It really, the return of money over time is really a crucial factor here. And this is why I think what has contributed to that tech blowout.
Well, we will see what will happen in the second half. Michael Mackenzie was talking about the importance of the labor market, certainly in the second half. Remember, the Fed has a dual mandate. It's inflation and the labor market. So if that starts to come undone and crosses a certain threshold, that could be problematic.
Also keeping an eye certainly on the bond market and the bond market reaction to all this, given that we didn't hear last night a big idea of not spending as much.
No,
from
exactly.
the government.
No. And, people have said that in an election year, or, that everybody's like, we're going to spend because everybody wants to get some money, and everybody wants to get the voters, right? So you say you're going to be spending.
I don't want to use the word pander, but there's not a better word. Like, you have to pander to different groups.
Yeah, exactly. So that's why you tend to see it. Kristine, thank you so much. Really appreciate it. Our Kristine Aquino, Bloomberg News Managing Editor for the Bloomberg's Market Live blog.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, we are all talking about that debate last night. Fair to say there wasn't much discussion of policy in the debate, though each candidate did try to make their case that the economic policies that they have are better for the country. The former president made the case without offering any evidence, Carol, that immigrants are coming into the country and taking jobs from Americans. You heard him say this a couple times.
He did, several times. And what's true is that the unemployment rate is right now hovering around historic lows. And even though things are cooling a bit, the labor market remains tight. We get another read on jobs next Friday when the June payrolls numbers come out the day after the 4th of July holiday. We've had so many conversations, though, the importance of immigration.
Exactly. And that's one thing that was driving me crazy during the debate last night is there was no discussion about how important immigrants are to the U.S.
Fact-checking.
If without immigration in the U.S., we would not have enough workers to fill jobs. I mean, we've talked about this so much.
Right. It would put more kind of inflationary pressures out there.
Okay, so to that end, our next guest argues that a tight labor market in advanced economies like we see here in the U.S. is a long-term trend that could continue as workers get older, and that has some serious economic implications, and they're not pretty. Olivia White is senior partner at McKinsey & Company. She's also director of the McKinsey Global Institute. She joins us from London. Olivia, what did you find in this most recent report? And start up with the idea that the tight labor market, it's not just a post-COVID blip, but it's actually a long-term trend.
It is not. Yeah, that's totally right. And thanks. It's a real pleasure to be here. It's the accumulation of a long-term trend that started roughly in 2010 after the protracted end of the global financial crisis. And that was a time where we had far too many workers, not enough jobs. And we've been steadily moving to a place where all of a sudden we have too many jobs, not enough workers. And of course, COVID threw us quite a bit for a loop for a couple of years, but where we're softening back to right now is that more tight place. And you can draw a line from 2010 to where we are today.
All right. So why should we be having this conversation? Why should we be talking about this right now?
Well, look, if what we want to maintain over the next, call it 10 years, is an economic output, GDP growth of what we've had even over the past 10, so about 2%. If we maintain our current levels of labor force participation, and if we maintain our current levels of productivity growth, we're going to be roughly a percentage point short. And that's a problem. And so we have to think about both what we need to be able to do in terms of labor supply and what we need to do in terms of boosting productivity.
Okay, so where does immigration come into this? Because it's something that we wanted to understand, not just in the U.S., but as we're seeing migration patterns all around the world right now as a result of many, many reasons. It's not just an issue here politically in the U.S. It's a huge issue in Western Europe. How does immigration play into this?
Immigration is one element in thinking about how you can boost your labor supply, particularly as your populations age. So yeah, of course, foreign-born workers, important elements. Other important elements to consider is both the female labor force participation ratio, but also how much everybody at every age, and particularly older people, say people above about 55, are working. So all of those things create an important mix that, frankly, as you said, every country across the developing world has to think about.
I'm sorry, Carol, I want to jump in here. Why are you seeing a tight labor market in other areas of the world too? Like, it's not unique to the U.S., but it's unique to advanced economies. You just laid out the U.S. version of it. But what other advanced economies? Why are you seeing it too?
Well, so first, if you look at a set of economies that seem developed economies that seem to have nothing much in common except these tight labor markets that you talked about, you see places like Germany, places like Japan, Norway, Singapore, the Czech Republic. And all of those places were actually at a fairly similar juncture where actually populations are aging and folks in general have eaten up the labor supply that they had in excess at the end of the global financial crisis. So it's a pretty similar explanation, quite frankly. And something I've talked to you guys about before is productivity growth or the lack of it in a bunch of developed economies. We've been living through these, call it 10 years up until about 2019 when COVID hit, where we had the luxury of being able to throw more people, more labor at the economy, at output. And we weren't growing productivity growth. We weren't growing productivity enough. And now we've eaten to bone. And we're at a place where we have to figure out both how to get more labor supply, but also how to continue growing productivity.
Hey, one thing I want to ask you as we talk about productivity, as you know, and I'm sure you have these conversations, we talk a lot about artificial intelligence and how that's going to take over a lot of tasks, right? Generative AI, large language models, advanced AI, right? That's going to do a lot of tasks going forward, and maybe there'll be some worker adjacent, with AI. Have you said that? But my question is, if we need to, I feel like we're arguing to bring in more immigrants, right? Or immigration, because we're going to need it maybe going forward to fill some of the jobs. But at the same time, like when I think about that, when I think about reskilling, do we really know what we need to be reskilling for if we don't really know exactly all the jobs AI is going to ultimately take over?
Well, and even you and I have had this conversation about AI, Carol. So near term, yeah, for sure. Near term, we're already near bone. So we can look quite specifically at the jobs where vacancies are the highest. And then we can start to extrapolate that into the future. And sure, if you take a telescope and you look, even 10, 15 years out, it's harder. But next year, the year after, yeah, we know. And the sorts of reskilling that we need to have in the pipeline are, for example, vacancies are very high in healthcare. How do we make sure people?
So how do you address that? I mean, immigrants make up a huge portion of healthcare workers, at least in large cities. We know that.
Sure, but you could also, for example, we're just talking about, you can increase productivity of healthcare. You can help educate younger people so that makes it easier for them to shift into other healthcare related jobs. So this is not a one bullet solution type thing. You got to do productivity and you got to think about boosting the labor supply along multiple axes. Foreign born folks, absolutely, but also increased participation of everybody else.
Do we need to also have policies to encourage people to have babies, as Elon Musk suggests?
Well, if our babies are going to start working at 1 or 2, that might be a plausible
You know what I mean,
but
the birth rates and so on and so forth. Although there's some debate about whether really birth rates are going down all over the place.
A 1 and 2 year old, they are not productive. They do not add to productivity.
Wait,
okay?
Liv, is it like out there,
Well, look, I will absolutely embrace this demographics conversation. I think it's super important. I'm actually working on it too, but it's not a fix for what we're talking about right now.
Hey, when do we start to see, we had an interesting conversation with Gina Martin Adams, our chief equity strategist here at Bloomberg Intelligence earlier this week about the way that AI has really benefited a few of the very large companies, NVIDIA and Microsoft, and we're still not seeing it play into the bottom lines of other companies that are not necessarily in pure play AI categories. I'm wondering, Olivia, what sort of you can tell us about, when we'll start to see that productivity end up in the bottom line of these other companies.
Yeah, look, my take on this is you see the sort of life scale of this go. You first get some experimentation, you then get some pilot, you then start to be able to wire it through your company. I would start to think 3 years, 4 years, and it's going to depend on the company, right? So the companies that start to see it coming in most quickly will think about it on that time scale. But look, remember in all of this, half of our economy is powered by small businesses. So it's one thing to talk about large companies starting to adopt things like AI, but it's just going to take longer to work its way through the full economy.
So if there was one policy you could change or one thing that you, or piece of advice that you would give to either governments and or companies, what would it be?
Companies, focus on broader talent pools and make sure you really give a good talent proposition to the people you hire.
All right, good to know. Hey, listen, always fun to check in with you. Olivia, have a good weekend. Olivia White, senior partner at McKinsey and Company, director of the McKinsey Global Institute, joining us there in London.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everyone. It is that time. Less than 20 minutes to go till the close of trading on this last trading day of June.
Nice job.
Of the month.
Of the month.
Of
quarter.
the quarter.
Of the half.
Of the first half of the year.
Not Happy New Year.
Not of the year.
Not
Made
there
that
yet.
mistake earlier.
Although it feels like we've been through a year.
It does feel like we've been through a year. Let's get to it with Alan Zafran. He's founding partner and co-CEO at IEQ Capital, joining us once again from Foster City, California. Alan, how are you?
Doing great. Tim and Carol, how you doing?
Hey, we're doing pretty well. We've spent a lot of time on our program today talking about the debate, and we've got to start by asking you about last night's debate. You manage around $25 billion. Did last night's debate change the way you're thinking about what happens in November, and therefore change the way you're thinking about asset allocation moving forward?
No, the debate result or the end of the debate didn't really change much. I think Trump has been the considered favorite going into the election. If you're taking a long-term perspective, you want to focus on economic issues, not near-term issues. I suppose if you're a trader, you could jump into health insurance companies and private prison stocks and credit card company stocks, and they're going up today, and avoid cannabis stocks and energy, EV stocks today. They're going down a bit. But other than short-term trades, I don't think anything's really changed. The market, in essence, is betting that for the most part, things aren't going to change. And again, just remind people, for us here, the biggest issue is really Congress and tax laws. And the best guess is we're going to end up with a divided Congress, and therefore there's going to be a limitation to some degree about what happens to changes in the taxes for corporations and for individuals. That's really what's driving probably future investing thoughts.
Well, so let's go there a little bit, and let's throw in tariffs into that, because former President Donald Trump has certainly said that that's a route he would go, putting more tariffs on foreign companies. He believes, it seems from conversations, that he believes that it's the foreign companies that ultimately pay it. We know that it ultimately ends up in higher prices of goods and more inflationary pressures. If he pursues that course of a policy, what's the impact then potentially on the U.S. economy and the U.S. financial climate?
You're right, Carol. Under Ricardian economics, if we're not going to optimize where things are going to be built and then transferred, we're going to end up in an environment of moderately higher prices, and the cost of your bronze shaver and your other imported autos or goods, particularly from China, are going to go up. That's not a great world to live in. It's going to also impair returns, all things equal, of non-U.S. equities. It will continue the onshoring theme that we've seen for quite some time. But I'm going to tell you, a lot of that is already built into the markets. If you look year to date, what's going on is the S&P is dominated by the mega 8 stocks, is up 15%. Small cap stocks are up only 1% for the year. So you're already seeing this dichotomy. And if you really want to get into the nuances of the difference between a Trump administration and a Biden administration, all things equal, the issues I think are a fewfold. One is I think you're going to end up with more fiscal stimulus from tax cut extensions and new spending. I think what they're going to do is they're going to take that Tax Cuts and Jobs Act, where the tax provisions are supposed to end at the end of 2025, and they're likely going to extend them, other than possibly for household incomes above $400,000. And I think the other issue is I think you're going to have less predictable central bank policy. I think there's a chance if we have a Trump administration, there's a greater likelihood Jerome Powell gets replaced as the Fed chair. So I think you're going to be in a world of slightly higher, all things equal, elevated prices, slightly more inflation, a little. I think you have less certainty about who's running the Fed in the short run. I think under both administrations, you're going to see fiscal stimulus either way. I don't think you're going to see changes in the Affordable Care Act. I don't think you're seeing changes in Medicaid cuts. You're probably just going to see moderately higher China tariffs. But again, Congress could get involved and mitigate what a otherwise Republican administration might want to do.
Alan, when does the bond market start to care?
It already does care. The bond market is fighting the fact we have a slowing economy, pushing yields down with the recognition that you're in a perpetual fiscal stimulus process where we can't balance our budget. So what's really driving the market crazy is the following, Tim. Here's the problem. If you came to me right now and said, Alan, you're a bank. Tim, I'm $34 million in debt, and I also spend $2 million more every year than I earn. Will you lend me money? Of course I wouldn't. But if you're the U.S. government, you're $34 trillion in debt. You spend $2 trillion more every year than you earn, and you get away with borrowing 10 years fixed at 4.25%. That's not sustainable. So the market is trying to discern at what point does somebody say, hey, the U.S. government can't pay its debt back anymore, which would put insane pressure on yields to go higher. But as right now, the dollar is our currency of choice across the globe. There isn't a better alternative right now. And in a world of slowing economic growth, all things equal, lower inflation as measured by today's PCE figures, and in a world where there isn't a better currency, yields are going to come down a bit.
They're going to come down a bit. Interesting. You think the outcome of the election is a given at this point?
No, it's never a given. I mean, even though I think it's a foregone conclusion that Biden will be the pick, there is some modest, and I mean relatively modest possibility they'll choose a different candidate. But I think yesterday's debate lessened Biden's chances of winning the election, but it's far from over. A lot can happen between now and then. But whatever was already built into expectations has increased the possibility that we'll see Trump as president. It's way too early to reach that conclusion.
How much do you think, too, potentially, I'm just thinking of some of the conversations we've had today, and you mentioned Jay Powell and, the risk of him being replaced, but I also do wonder about the dual mandate, just generally of the Fed, right? It's inflation, it's also the labor market. 1 week from now, we're going to be all over the latest read on the U.S. employment situation. Having said that, is there a concern that the labor market, we're getting mixed, conflicted data, that is starting to come undone, and that's going to be a major risk potentially to the U.S. economy when it comes to spending, when it comes to the cycle and how it plays out.
Right, and so whereas large cap tech stocks are trading, the Meg 8 are trading at 31 times forward earnings, the S&P itself, even including them, is only 21 times forward earnings. And you look at mid caps and small caps, they're 15 and 14 times. So
that plays into what you're seeing in the small cap and mid cap space.
Exactly. The market has already snuffed out that other than if you're not an AI stock or a weight loss stock, you're not really doing so well right now. So the market's already sniffing out kind of that labor market weakness. And interestingly enough, if you look back about 24 months after the first rate hike is where you really typically see the detriment of labor markets. So we're actually seeing now the effects of the first rate hikes that happened almost 24 months ago.
We've talked about
that's
what's
going on.
The long and variable lag.
The t-shirts
particularly Tim and Carol, in an environment where we threw massive amounts of fiscal stimulus to offset COVID.
Right.
What we did is elongated and delayed the impact.
So even longer and variable impact and lag effect. Alan Zafran, thank you so much. Have a good weekend. Happy 4th of July. That's just around the corner. Founding partner and co-CEO at IEQ Capital, joining us from Foster City, California.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.